What's up, guys? I'm Mike D'Antonio, founder and CEO of StockedUp, and welcome back to the Stocks with Mike and Tom show. We have an awesome episode for you guys today. We're going to be talking about a couple cool technical breakouts and cool stock patterns that are currently going on in the market right now. We're going to be talking about how the unemployment rate is soaring. We're going to be talking about a $7.1 million option on Beyond. And we're going to be answering all of your guys' previous questions from the last podcast. If you guys are new here, don't forget to subscribe. You'll see our weekly, or actually daily, stock market analysis watch list videos every single day. And other than that, Tom, if you want to get us started on Beyond.
Yeah, pretty much. On Friday, Beyond shot up a total of 8%. And you can see that they did have a very strong setup to where they closed pretty lower on Thursday. And then on Friday, you could see as soon as the morning hit and 8:30 CST came around and the market opened, they just had two very solid green candles on a 15-minute chart here. Shot all the way up from about 120, about all the way up to $130 a share within 15 minutes, which is a huge rise in Beyond. And you could have even played this twice that day. You could have played the first breakout play, and then you could have played the second breakout whenever it hit the resistance again, right around 130. So it was just a very simple play on Friday, and everybody's been watching Beyond, and whenever you saw it break out, it just could have been a very solid continuation play up.
For sure. So I'm sure a lot of the listener or the viewers on this video are curious where exactly those two breakout levels are. So if you could highlight those real quick, that'd be awesome.
Yeah, definitely. So the first breakout level would have been right here where it broke above yesterday's high, which was right around 125, 126. So you could have gotten in right here around 126.
Yep.
And that would be the first little line there. And then the second resistance line is going to be up at the top up here, right around 130. And you can see how in pre-market or post-market the other day, it went ahead and hit like right around 130. So if we just draw a nice little resistance line there, you can see we break that resistance. And whenever resistances get broken, they then become supports. And you can see it comes right back down and touches the support again. You could have made a solid day trade at the end of the day from 130 back up to $134.
For sure. So yeah, thank you for drawing that. I'm sure a lot of the viewers will appreciate that. But yeah, Beyond is up 8%. That's a pretty big move. If you could go to a daily chart real quick, I just want to get like a gauge of how Beyond has been fluctuating. They're pretty close. Are they at all-time, or they're definitely, oh no, not at all-time highs, but
their IPO was pretty crazy, but
yeah, they're still doing pretty good though for everything that's going on. So Beyond's definitely having a pretty big move. So yeah, keep that in mind, guys. And then Tom, if you want to talk about the Bank of America play.
Yep, and Bank of America was another very simple play. You can see on a daily level here, they've been following this little triangle I've drawn, and that's been very good for us on a technical level. And if I go ahead and come into the intraday charts, this is just 15-minute candles here. You can see that on Thursday, they opened up and they consolidated right on my 100 SMA, and then they did break the previous day's highs whenever they opened up this high in pre-market. So what you could have done is you could have just played the simple play of it broke this high right here. Obviously, it was a little higher in pre-market and like right on open, but it broke the intraday high pretty much and then started going up. So what you could have done is you could have said, okay, it went up. You could have done just like Beyond with the Beyond play, how it comes back down and touches the support level again, like right there. I drew that red line. And then we also have the other breakout play, which would have been right in the morning. You could have played it within 15 minutes where it broke this high at around $23 a share, or I mean $24 a share, sorry. 23.11 actually, and then it shot all the way up to 23.40, and that's where I played the breakout play, and that would have been the smartest place to get in because it truly broke that high the day before, and it's very simple.
Yeah, for sure. So awesome insight. Now, guys, we're going to be talking about some fundamental, what's going on in the economy right now. So, guys, the unemployment rate is surging, okay? There were 20.5 million jobs lost in April alone. That is huge. Now, the unemployment rate right now is at 14.7%. So, that's the unemployment rate. However, there's another unemployment rate called the U6 unemployment rate. U6 unemployment rate, okay? Pretty much what that is it includes people who want a job but stopped trying to find one. And that rate is at 22.8%. 22.8%. So that's crazy. Really, this is just it's a bad sign for the economy. But the weird part is that the Dow is up 500 points on Friday. Like, the markets are up. So like every time the unemployment rates come out, the market goes up. We're getting horrible numbers, but the market's going up. So we're in a weird market right now. And then another interesting thing is that out of all the jobs that were lost, some of these jobs might never return, while some of them are going to return right when the whole pandemic is over. So Tom has a chart on his screen right now. Pretty much it's just showing you a visual of the unemployment rate, over time. So we could see during the Great Depression, we're sitting at about 25.5%. Right now, we're sitting at about 14.7%. Now, the thing is, in terms of amount of people unemployed, we're sitting at close to the top right now. Just like how populations get bigger over time. Obviously, like, there's more people unemployed now than there were in previous recessions and depressions. But we're still doing. It's not good. It's really not good. But guys, the savings rate right now, and no one's really talking about this, but this is interesting. The savings rate is at 13.1%, and pretty much what that means is that people are saving a lot of their money. Like, that's it's not normal to see a savings rate that high. And basically, guys, 2/3 of the economy in the United States is made up by consumer spending. So having people just saving their money, that's not a good thing. We need money to move around, and that's how economies grow. So
yeah, cash flow is what keeps the market going.
right.
It has to keep flowing into the market.
Yeah, just those constant transactions. So what's the saying? It's like someone's spending is a one man's spending is another man's income, and like that. You ever hear that, Tom?
Yeah, it makes sense.
Yeah. So yeah, I mean, if no one's really spending, then the income's lower too. So yeah, pretty much that is that with the unemployment rate. Just keep your eye on it. But it is weird to see how the market is going up with that, even though each week it's getting worse and worse. So now on for the unusual option for this video. We are watching Beyond, and it is the 150 calls that expire next week on May 15th. And someone put $7.16 million into this play. Okay, $7.16 million into the Beyond 150 calls on May 15th, and Beyond is only sitting at $133 right now. So based on that, Beyond is definitely soaring. They're doing good. They're up. What was it, 8% on Friday?
Yeah.
So since whoever is trading these 150 calls, these calls are very far out of the money. Okay, so pretty much what that means is the institution or the large trader, putting all this money in this trade, is probably shorting these options because they're so far out of the money, and it would be foolish to spend this much money on an option that is so far out of the money, because you have a higher chance of losing. So Beyond, it might bounce a little bit next week, but I think it'll definitely close below 150. So yeah, and now on to the frequently asked questions from yesterday or the last podcast. We have Michael saying Apple also has dividends tomorrow. Not sure if people will sell after this date. I mean, Apple is very, very confusing right now. Okay, we have, 7 or 8 green candles in a row. What is it, Tom? 1, 2, 3, 4. What is it? 8? 8 green candles in a row. I don't even remember the last time this happened. You would think there would be some sort of pullback or something, but Apple is closing very strong on Friday. So like the thing is, like, honestly, like the safest thing to do is to sell like a call credit spread. But there's just a lot of variables right now with Apple. It's just I'm stuck between Apple has a ton of momentum right now, and generally you don't want to fight against that. But at the same time, to have 8 green candles in a row, and then with everything going on in the market right now, and then you look at Microsoft, and Microsoft's not moving like Apple, so you'd think Apple would slow down. Like I'm just It's just a confusing play right now.
Yeah, and it doesn't have like the type of volume that like Beyond has. Like if you look at Beyond has these nice big like 8% green days and stuff, but Apple's just having these very nice, very small green days upwards, which is kind of strange, but that's kind of good for a long-term setup. But at the same time, when is Apple gonna hit the top up here and come back down?
Yeah. Yep. So Iwu said, with the market going up and the call outs being puts, would it be playing safe if we hedge our plays like the T and AAL put? You can, it's definitely a possibility. You can definitely do that, but that is, just like on a personal basis. Like if you wanted to do that, there are a lot of different ways to do that. Like you could use credit spreads, you can use like ratio positions. So you could buy like, I don't know, like let's say like 5 puts in 1 call, or you could, buy like the puts that expire on June 19th, but then you could buy calls that expire in a week. There's a lot of ways you could hedge it. Gio said, question for the next podcast, is the main thing you look for good plays is if it breaks the highs, and does it mean highs in either after hours market or normal hours? Also, does breaking the high mean of that week or the day before? So I would say probably 90% of the time it's the day before. Like we're referencing the high from the day before, but like let's say it's like Thursday, right? And the market's open and we're waiting for a stock to break the high. And let's say like the stock is at like 104 right now, and the high the previous day was like 105. But let's say like there was a huge resistance level at 106, then we would obviously definitely reference that 106. Like, like there's no like science behind it, guys. I don't really want you guys to overthink it by, complicating it or anything, but like we're just looking for a resistance break, so generally we always look at the stronger resistance point. So most of the time it's going to be the day before, but if there's a huge resistance level in like the past 5 days, then we'll just reference that. But the main thing we look for is if it breaks the highs, and that's for day trades.
But if there was though in the pre-market or post-market, like I have in my chart here, you can see like on SPY, obviously, S&P 500 futures go up overnight and in the morning. So it's going to move a lot of SPY in the pre-market and post-market. And you can see how like SPY went up and hit this high in pre-market at like 292. So all you would have had to done then is just wait for it to go above 292 then in the day, which was at the very end of the day, unfortunately. But you could have played it from 292 then up to 294 at the very end of the day,
right.
if you could have gotten in that. But that's something where you just have to know that there's only 30 minutes left at the end of the day, and you're probably not going to be able to play that then.
Yeah, that's true. But yeah, Tom pretty much answered your question. So definitely reference after hours and pre-market too, though. Okay, we have Dino saying, I'm learning a lot here, but question for the momentum plays, for how long do you plan to stay in them? So they're very, very quick. Sometimes they're literally, like sometimes with some of the day trades I call out in the Discord, sometimes some of those plays are literally 3 minutes, okay? But normally I would say they're about 10 to 15 minutes long. In slower moving markets, I would say maybe like 30 minutes, but they're pretty quick. Okay, Levi, we have great job. YouTube group that I like to follow to get daily options opinions. I love the way both of you respect each other's views and your unique perspective from both of you on stocks make the channel unique. Thank you and keep up the great job. Thank you. Love to hear that. And thank you very much for the comment. Dino said, I want to be friends, LMAO. Peter said, what do you think on a long-term play on HAL? I'm eyeing the July 17th 21 strike calls. I really believe the stock will shoot up with oil once all the states open up and the economy gets going and the demand for oil goes back up. It actually doubled from around $5 at its low in April to $10 a share now. So
I do like its setup, but it's just so low in price.
Like the thing is with oil right now, it's just weird. We're seeing oil getting killed, but then we watch, Exxon Mobil and, HAL, Chevron, like all these oil companies mainly, and they're going up. So like, I don't know, like I think oil is moving very weird now, and it might be a great play, but I'm not like, I wouldn't like count on it because, oil is just, it's affecting the market very, very weird right now. Do you know what I mean?
Yeah, and the one thing I'd really look at is even though it's an oil stock, it's $10 a share now, and it was $4.25 a share, a couple months ago. So if it starts going down and it hits lows again, you're going to be losing over 50% on
Yeah.
this stock. But if you choose like
Yep.
Chevron, for example, and it goes back down, well, that one's pretty close too. But Exxon and Mobil is more like you're losing like 30% if it drops back
Yeah.
down to 30. So
Yeah.
it's just a big risk reward thing with that one. HAL is a little bit low in price, and going from $10 to $4 a share is pretty. That's a pretty steep drop.
Yeah, for sure. B said, "Hey guys, what are your thoughts on Procter and Gamble, KMB, and Visa?" So Procter and Gamble, I like them. They're a value stock. I would not mind holding those for the long term. They do. They're a pretty great company. They've been around for forever. Value stock, like I said, I like
Yep,
them.
I share your views on that one.
What were you saying?
I definitely share your view on Procter and
Oh,
Gamble. It's very safe, and they're doing a lot of stuff right now with the virus, aren't they?
right, exactly, exactly. What's KMB, Tom?
KMB or KN?
KMB.
NB.
Kimberly Clark. I never heard of them.
It
So
looks like the same exact setup though as
yeah,
as Johnson and Johnson. Let's see.
yeah, Procter, yeah,
Oh yeah, Procter and Gamble. Sorry, very similar companies. Let's get side by side here on a 5-year daily chart. Wow, yeah, pretty much the
yeah,
same exact play.
yeah. Looks very, very similar. I never heard of KMB before, but they're probably associated with Procter and Gamble. But if I'm gonna invest in the industry anyways, I'm gonna go with the top dog. So it'd be Procter and Gamble. Visa is. Let me take a look at Visa real quick. Visa, they're also a strong company. I really don't follow them too much, but I definitely wouldn't mind holding them. Strong company. Looks like they're maintaining their dividends, so that's a good sign. Do you have any insight on Visa or anything, Tom?
I love Visa for the long term just because they're obviously like the leader in credit cards. You do have MasterCard and you have Discover, but I think Visa is definitely the leader in the long term. And you can see that their stock has really shown that. They over the past few years they've popped from like $50 a share all the way up to 214. And they did have a big downturn during the virus, but they have recovered quite a bit and they are starting to trade above their 100 SMAs. And as long as they continue breaking out, I might even play it for breakout plays.
Yeah.
Along with some long-term plays. So
Right, right. Ronnie said, "Let's go." Super excited about next week. Really pulling for that 3M play. So yeah, 3M definitely pulled through on Friday. I think it has a lot more momentum to continue though. So that's a great sign. Geo said notification squad. Oh yeah. Yeah, guys, if you aren't in the notification squad, join. All you have to do is click subscribe and then click the bell right next to that. And every time we post, you will get a notification. You'll be the first one to see our watch list and daily stock market insight. So we have Keith saying, "Hey guys, I'm loving your channel and appreciate you sharing your knowledge and time with us. I wanted to get your thoughts on WDC, Zoom, and DKNG." So WDC, Western Digital. Tom, I'll let you cover this one.
all right, yeah. So getting into Western Digital here, they're a very good company for the long term. They are another computer manufacturer similar to AMD and Intel, but Western Digital more focuses on hard drives and solid state drives, which is like a memory system for your computer where you can store like your gigabytes and megabytes and stuff like that. And obviously they're going to be good for the long term, but in the short term here, they do have a very nice setup, and I do like them. But over the long term, they are trading very low, just like a lot of these other stocks are. So really, it just depends what the overall market does. If the overall market, I think, goes up, Western Digital is going to go up. If the overall market goes down, I think Western Digital will follow them back down to like $30 a share.
Yeah, and then I noticed that, we look at stocks like Apple, Visa, Procter and Gamble, and they're really popping up from their lows. And
Yeah.
you see WDC isn't doing that. So that's interesting to look at. Then we have Zoom. So I think of course they really did well during this whole pandemic crisis because they pretty much, they're the software you're one of the softwares you use to get on like your online meetings for school or business or conferences or whatever. So, they're doing pretty good. They're at their highs though. Like, I wouldn't buy into them right now for the long term at their highs, but I definitely would momentum trade them though.
Yeah, same here. It's another one of them things where it's so high that why would you buy in at 180 a share whenever it was 100 a share a month ago? Yeah.
Yeah, exactly. And then DKNG, I believe they just IPO DraftKings. Yeah,
Yeah.
recently. Do you have any insight on DKNG?
Yeah, definitely. I've actually personally used DraftKings before. I'm really big into sports and baseball and football and stuff like that, and I've used them to bet on sports before, but they're not like a true sports betting website. It's more like a fantasy thing, like where you draft a fantasy team and then play. But I think their company will do very well overall because it's very simple. You just sign up with your credit card. You put your credit card on there. You put in $10, and then you can just draft your fantasy teams. And it makes sports a lot more fun to watch and a lot more exhilarating. And I think that with DKNG, and then we also had DAN, which was a casino gambling thing the other day, another IPO. Or no, it wasn't DAN, but we did show that one the other day. Another game, a
Oh,
GAN is
no.
what it
Yeah,
was.
GAN.
GAN.
Yeah.
They IPO'd and ended up shooting way up. You can see they went from $3 a share all the way up to 15, which was just insane. But with DraftKings, I do like them for the long term, but I have heard some problems with them as far as like lawsuits and stuff go, because with these betting websites and stuff, there's a whole bunch of very fine numbers involved, and they're even starting to trade these bets on like baseball and stuff like stocks. Like they have charts up that move around up and down, kind of like an option would.
Oh, really?
It's kind of crazy. Like they're
Yeah,
getting really into it now, and if they get into stuff like that, DKNG could definitely pop in the long term.
for sure. So now we have Hayward saying slower on your momentum plays. So, yep, momentum plays. You got it. Sean said, great video. I bob my head a little every time to the new music at the front. Love it. And let me see. We have, let's see. So, Nora saying, how do you join the Discord chat? It's the link in the description down below. And then let me see. So Hunter said, awesome video, guys. Do you think tensions between China and the U.S. over the coronavirus could jeopardize the trade deal or cause another trade war of some sort? So I would think China would face some repercussions for the the virus for sure. I know Trump was saying how didn't Trump say something the other day, Tom, about how he thinks that the virus came from a lab? Didn't he say that the other day?
Yeah, that they've actually been talking about that for a long time, but he did actually finally come out and make the official, official announcement that
Yeah.
he thinks it came from a lab, but he's been calling it the Chinese virus for a long time, and they've known it came from China. The CDC put reports out about it like a few weeks after we started getting it here. But the biggest thing with all of that is that with China, if I've heard a lot of people talking about this, and if we don't repay our debts to China, that hurts the U.S. because then people will not lend us money the way that they have been. How we've just been borrowing money, and just racking up our trillions of dollars of debt. If we don't pay that back, these companies are not going to let us borrow that money anymore. So like if we don't pay China back, it's simple. They just won't let us borrow anymore, and that could definitely hurt us in the long term.
Yeah, I know what you mean for sure.
Because our treasury notes then aren't worth anything because we might not pay them back.
Well, right. I mean, they of course like they'd still have value, but like we're like a AAA rated government right now, like in terms of like credit and stuff like that. So it would definitely hurt the credit, and that would definitely have a ripple effect on a lot of
Yeah.
other things. Like the bond market is one of the largest markets in the world, and that would definitely affect that. I definitely think there's going to be something, but at the same time, Trump doesn't really want to stir up too much more because the election's coming up again. You know what I mean? So like knowing Trump, I'm sure there will be some repercussions to China, but at the same time, I'm sure he doesn't want to start too much other stuff after we have a 14.7 unemployment rate and the market's down this much. So I think we just have to wait and see with that one for an official reading. But other than that, guys, thank you guys so much for watching this video. As always, if you have any questions, you can let us know in the comments down below. If you guys aren't subscribed yet, don't forget to subscribe. We post daily stock market watch lists and analysis videos. So if you subscribe, you can get those videos on your homepage every single day. And like I said, guys, any questions or anything, let us know in the comments down below. But other than that, thanks for watching.